Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1-week basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 V2 returning minus 0.87%, down to CBAM 5 V2 returning minus 2.03% in a week which was relatively risk off, and there was nowhere to hide across fixed income and equity classes. In terms of positive contributors to performance, we did see some safe haven trades there in a risk-off move, and that would see US government bonds up 0.99%, alongside Euro government bonds up 0.58%. And then we did see some recovery there from iShares Global Clean Energy up 0.18% in an environment where we continue to see inflationary pressures coming from rising energy prices. In terms of detractors from performance, we continue to see weakness from Baillie Gifford European equity positions and Schroders European equity positions, down more than 4.48% on a 1-week basis, as tensions continue to escalate in the eastern region of Europe between Russia and Ukraine, and again some inflationary pressures as Europe deals with this energy supply crisis after trying to wean itself off Russian dependency. JP Morgan Japan was also weak on the week, and that was due to weakness that we've seen in the Japanese economy and some consistent strength on sterling versus Japanese yen, contributing to that currency translation loss there on JP Morgan unhedged equity positions. On a quarter-to-date basis, 1 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 6.87 for portfolio number 1 down to minus 12.16% for CBAM 5 V2, and that would see the main attributors to performance. Again, China being a top performer on the quarter-to-date basis, and China being an overweight within the CBAM portfolios. MSCI China from HSBC up 5.86%, down to Threadneedle China Opportunities up 3.3% as the active fund manager in China there. In terms of detractors from performance, as I mentioned earlier, we continue to see strain in European equities, which have been indiscriminately sold off, and that would see Baillie Gifford European down 24.22% and Allianz Continental down 21.76%, as investors continue to mull a risk-off sentiment for the European region in general. Artemis US Extended Alpha, some weakness there as well, broadly reflective of a strengthening dollar versus pound, as the Federal Reserve Bank moves faster in terms of interest rate hikes in terms of trying to rein in runaway inflation in the US economy, and that would see the hedged aspect and currency translation of the Artemis US Extended Alpha Fund contributing significantly to that 18.56% underperformance on a quarter-to-date basis.